Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, we are going to talk about property insurance, homeowners insurance, in the vein of the LA fires. So this is like what to expect, what things probably covered, what things may not be covered, exclusions, and then the insurance companies that are maybe not giving insurance or that are canceling policy. We're going to go over all of that. We also have very interesting data on which counties are at high risk for more wildfires and how many numbers this is. And these numbers will blow your mind because if any one of those happened, it would make this look like people would forget about this.
Okay, so two things. One, remember to like the video, subscribe, hit the notification bell, share the video, and leave us comments that are related to real estate. And two, we are not insurance people. We are looking at this from the perspective of the same as you, people who maybe own homes, have homeowners insurance, and what does that look like? And these are all caution. The thing that we're watching unfold in California is a cautionary tale for all of us. So that's the spirit in which this is meant.
Okay. Let's first go through some of the things that are likely to be covered. This is obvious. Dwelling coverage. What does that mean?
The four walls.
Okay. This is what people expect.
Right.
When you expect your house burns down. If you had a mortgage, the mortgage gets paid off, and maybe you get some cash out of it, or or you can build a new house or something, right?
Sure.
Okay. Other structure coverage. What is that?
So, for example, you've got a shed in the backyard that they will cover up to 10% of your home value. So let's say, for the sake of argument, that your home is insured for $100,000. They will cover up to $10,000 for the shed.
Okay, or but casita maybe?
So casitas tend to have a separate policy, but it's outbuilding. So think of it that way. So maybe a shed, maybe a pool house, maybe that sort of thing. It's generally not a dwelling. It's some other structure, but not a dwelling.
Or if let's just say you have $1 million policy, and your house is just gone, it's burned down. Yeah. Do they just write you a check for $1 million since that's your coverage?
No, they're not going to. So there will be exclusions. So, for example, depending on your policy, read your policy. Depending on your policy, in the case of a wildfire, there may be limitations. So, I've heard anecdotally that there are policies out there in SoCal where wildfires, they have exclusions that they only cover maybe 40, 50, 60% of your policy value, depending on how your policy is written. I have not seen these policies, so I can't speak to them firsthand, but these are just in discussions that I've had with people regarding this. So it's important that we read our policies.
Okay. You can also have your personal property in your house covered.
So really interesting. So personal property, it's a really funny thing. So for example, they're not going to cover your Monet and your Rodin, okay? They're not going to cover that. You need a separate policy for that. But when you think, well, personal property, well, maybe my jewelry's covered. Not so fast. Your jewelry is very, very minimally covered. So most policies will have like $2,000 to $5,000 coverage, or some nominal amount like that. So if you have nice stuff, you will need a separate policy for that.
What if you live in a condo?
Oh, great question. So if you live in a condo, so there are two different policies at play at that point. There's the condo association's policy, right? Because that covers the externals, right? And then there's your personal policy, and that covers the internals. So that would be anything within your four walls is covered. Everything on the exterior is covered by your association generally.
Loss of use coverage.
Yeah. So they'll pay for things like, maybe hotel or rental, maybe meals, maybe pet boarding, things like that. But remember, these are all within policy limits, which I go back to read your policy, because your policy has limits on everything.
Okay. What things might not be covered in personal property coverage?
So I kind of touched on that as far as maybe artwork and jewelry, but there are other things that are, regardless of coverage, they can't be replaced. So, those family pictures on the wall, they can't be replaced. There is no coverage for that. Your baby blankie, there's no coverage for that. So there are a lot
there's no way to get those things back.
No, absolutely. There's no way to get those back. So there are a lot of things, between some of the big things like art and jewelry, maybe coin collections, maybe book collections, all kinds of things that are not covered that you need separate policies.
Flash drive with Bitcoin on it.
Drive with Bitcoin on it.
Not recoverable. Yes. Okay. We're going to talk now.
The other one that a lot of people have is weapons. Okay, so we have friends that have lots of absolutely lovely weapons, whether they are
their own militia.
They are their militia, and so collect antiques and that sort of thing. So, but those would not be covered either, or the coverage is so nominal it doesn't touch what the expense of replacing those items would be.
Okay, so we're going to talk about some of the other parts of California that are high risk for wildfire damage. Okay, here is the chart. We got this. This was published by insurance company or something, wasn't it?
It was in an article.
Okay. Los Angeles, of course, there's 245,000 homes at risk. The estimated cost to rebuild them is $186 billion. Now, these cost numbers are important because we're going to talk about the insurance companies who have left and how much their profit margins are. So you'll be able to see that, like, if LA burned down, there would be zero insurance coverage, right?
Right.
So, okay. So LA is a high risk, 245,000 homes. This fire, under 2,000 right now, for the most part. Riverside, 210,000. San Diego, 138,000. Sacramento, 100,000. And San Francisco, which you wouldn't think of because it's like wet. There's a bay, but there's still fires up there, 93,000. Okay, Wanda, these are big numbers, 186 billion. How much damage was there from was it the hurricane that just went through, or one of the hurricanes went through in the south? How much damage was the Florida one, right?
Right. So there were two hurricanes that went through in Florida, and the damage was something like in the order of like $47 billion. That those were the losses. It was, just an astronomical amount.
Okay.
So nobody can weather that, no pun intended.
Right.
So the damages are huge. And when you look at what the people in Florida got, that was really heartbreaking.
So $47 billion.
Right.
And how much did they get?
So more than about half the claims were denied.
Okay.
So flat out denied. So about half the people got nothing.
Yeah, your policy doesn't cover that hurricane.
Right.
Okay.
And then the other half that got something, that's the thing, they got something. Okay.
So how much?
I don't remember the exact number.
It's like 400 or 500 million.
Right, but
so it's like 1% of the total damages were actually paid out.
Right. So it's very heartbreaking. So this is important to understand the numbers, because when people think that they have coverage, well, you maybe have better coverage and you're more likely to get a reasonable or closer to reasonable payout from the insurance company if you are an isolated incident than if they have a lot of things to cover.
Okay, so here's Allstate. Now you're probably saying, hey, these companies are super rich. They make tons of money and they're just stealing from people. So,
okay, so look, as somebody who pays insurance, I agree with you, okay?
Yeah.
Because I know what my insurance costs me, and it costs me a fortune, and so I would agree with you. Now, let's look at the numbers and see how they stack up.
Allstate reported a net loss of $316 million for the full year 2023. It's an improvement from $1.4 billion net loss in 2022. How about State Farm? Like, they do TV commercials. Same with Allstate. State Farm did not report a profit in 2023. Instead, the company reported a net loss of $6.3 billion for the year. So remember those charts we showed you with the, 300 billion, 200 billion? No insurance company is going to cover those. As a matter of fact, here is a list of insurance companies in California and what they are doing right now. Okay. 7 of the 12 largest companies in California have either completely paused or dramatically limited the number of new policies. Okay. State Farm, they stopped in May of 2023. That's like over almost 2 years ago. No new policies.
Right. And then they also didn't renew like 72,000.
Yes. And they have specific areas. And some of these were in like Palisades, an area like that. They just say, we're not renewing you. And that's some of these people who are complaining that, hey, 2-3 weeks ago, my insurance canceled and now I didn't get new insurance and here I am. I don't have insurance. Farmers, they're going to only do 7,000 new homes insurance policies per month. Also not profitable company. Allstate paused writing new home insurance policies and not new construction, meaning new policies on homes in November of 2022. USAA is only doing them in low-risk wildfire areas. So if you probably live in the city of San Francisco, like maybe at one of the parts where you're like on the water, maybe you don't have a high wildfire risk. We're in Coronado in San Diego. But if you're anywhere else in the state, man, the whole state is relatively dry and it has a lot of hills and brush, which is a big problem there. Travelers, they're doing fewer, nationwide scaled back. Chubb, I don't know who they are, restricted high value coverage and high wildfires. And there was one more that we were talking about. I don't remember the name now, but they also basically said, we're done, we're out. And it was a big one. Remember, this is all regulated by the state. The state gets to regulate how much they charge, what their coverage limits are and everything. But then they can say, we don't agree. We can just, meaning the state can't make them because there's 50 states and you have to deal with every state.
Right.
Right.
Yeah. So it's very complicated. The bottom line is that insurance companies are in the business of being in business and of being profitable. So when you see these losses, even if you say, well, these are paper losses, whatever kind of losses they are, they're still losses. And insurance companies are trying to not lose money. They're trying to make money. And when they see areas that are prone to having losses, to having events that cause them to have to pay out claims, they're going to say, you know what, there's low-hanging fruit elsewhere. I don't need to play in this market.
Okay, these are some things excluded from insurance, meaning chances are if you go through your policy, you probably didn't even look at it. You probably just assumed you're paying some money, your house is going to be covered. Earthquake, East Coast, not a big deal. California, kind of a big deal.
California's big. You know what? Nevada, we have lots of earthquakes. They're little, but we have lots of earthquakes here too.
I don't know that we've ever had like a house destroyed by earthquake. Now, imagine a big one in the Bay Area. This is why. Could you imagine a huge earthquake in the Bay Area that took out, say, 200,000 houses, took them out? Like, they're damaged so bad they had to be torn. Like, the house doesn't have to be totally destroyed, but if it basically falls over or starts cracking.
Or it just has to be structurally unsound.
Yeah, structurally unsound. They condemn it, and then you have to tear it down and build it up again.
Right.
Like, that would take out every insurance company doing business in the state would basically say, we're not going to cover that. So earthquakes aren't covered. That's why. Floods.
So let me give you an example about a flood, because you think about, Las Vegas doesn't have floods. We have less floods now than we used to. We have absolutely excellent flood control. We have people coming here from literally all over the world to see what we've done for flood control here because we do it so well now.
We only get 4 inches of rain here. But when it rains, it usually is a downpour, and because it's a valley, all the water tends to flow. So we have to divert it, or else it just starts building up and it starts taking out. Like I have a friend whose yard had these massive landscaping, like these huge boulders were like $2,000 each in his front yard. He said they were gone, and it took out all of his land. It came down the street. The house was fine because it slopes down a little. It took out all his landscaping. His boulders were gone.
Right. So I have a friend, and last year we had some rain, and what happened to her was that the rain, to your point, came down the street, and the elevation of her house. Her house is here. Her neighbor's house is here, and so the mud from that is between her house and her neighbor's house came down, and it came into her house.
Okay.
And none of that was covered because she has regular homeowners insurance. She doesn't have flood insurance. So because the water and the mud originated on the outside of the house, she did not have coverage. She would have had to have flood insurance in order for that to be covered. So understand that you don't have to live in the Mississippi Delta or someplace that floods majorly to maybe have the occasion to have a flood event.
Sinkholes, sewer backup, government intervention, wear and tear, of course, damage due to lack of maintenance, rodent pest, damage from pets, like all those are excluded. So basically not much is actually, like your house burns down, I think is the biggest risk. Faulty wiring, your neighbor hates you and he set your house on fire, right?
Well, that's a crime, so that's a different thing.
That would be a crime, but then maybe you have a gas leak in the garage, and
right,
that's
right. So say for example, there are high winds, maybe not a hurricane, not a tornado, but just high winds, and maybe tiles blow off your roof or your fence blows down, something like that. Then homeowners insurance would go ahead and cover something like that.
If you need professional advice, this is not professional advice. We're not licensed. We're just talking in general. You need to talk to your person who does your
insurance.
And I know that there's probably a lot of people right now who are trying to, work this, whatever out they have. The problem, I think, is going to be people who are in California, parts of California, especially in LA. And, remember, if wildfires are not included or they're excluded to a lesser amount, then it's going to cause a problem for people who say, well, the main risk is my house being burned down by wildfire. And if you have a main risk for your house being burned down, then that is probably not going to be included.
Right. The thing to also keep in mind is, these wildfires, they're terrible and people have lost their homes, and we recognize that. But when you look at the number of homes actually impacted by this versus all the homes in California, it's actually a very small number, right? It's a very small percentage. So while this is very, very dramatic and it's all over all the media, the chances of it impacting you personally are probably very small. It is important that what we learn out of this is to read our policies. Read our policies and understand. And the thing that I want you to remember is that the premium that you pay does not necessarily correlate to the coverage that you have. So what I mean by that is you might be paying a lot in premium, but you may not have maybe the coverage that you want or that you think that you have, and vice versa. You might not pay that much, but maybe you do have the coverage that you want and you think you have. So take a look at your policies. It's really important, and it's important to take a look at them every year, because even though they renew, those numbers do move around. So you want to make sure that those numbers reflect what is of most benefit to you and what applies to you and your situation.
That's it.
All right.
That's all I have.
Please remember to like the video, subscribe, hit the notification bell, share the video, leave us your notes. You can leave us your stories about horror with insurance companies or good experience with the insurance companies, or whatever it is that you want to leave us real estate related. We appreciate it. Please continue to watch the videos, and we'll see you on the next video. Bye.
Bye.